Good day, my name is Marc Wiese, I'm the MD of Warwick Wealth, and the purpose of this video is to discuss a question that often arises with new potential investors, that being, where should I invest my assets? Now, within the South African investable landscape, there are several different options available. However, the two most prominent are unit trusts and personalized share portfolios. Now, before we go into the advantages and disadvantages of each, let's define what is a personalized share portfolio. Generally, a personalized share portfolio is where an investor holds a list of underlying stocks within the broking distribution account. This could be either local or international stock holdings. A unit trust, however, is the pooling of assets together, often hundreds or even thousands of clients together, to buy a list of underlying investments within the unit trust environment. When we delve a bit deeper into the pros and cons of each, I think there are several different advantages and disadvantages to owning a share portfolio or unit trust, and obviously the benefits to the underlying client would very much depend on their specific goals and needs. However, let's look at 5 main comparison areas. The first one being a bespoke investment vehicle. Now, a personalized share portfolio does allow an investor to have a bespoke investment view and either own or not own any specific stocks in their portfolio. As a practical example, clients might wish to not hold any alcohol stocks in their portfolio, compared to a unit trust environment where investors' assets are pooled together and each investor would hold whatever the unit trust has bought underneath. The second area is transparency. Within a personalized share portfolio, clients have full transparency of all the different holding within their portfolio, and within a unit trust environment, generally asset managers don't disclose each and every stock that they own within the portfolio. As you can imagine, this is around the intellectual capital of the asset manager that has chosen those stocks. On transparency, another important element is costs. Within a personalized share portfolio, clients can see a breakdown of each line entry on specific costs that have gone off in the portfolio, whereas unit trust would generally just have a total cost or a TIC as defined on the MDD or minimum disclosure document. The third element, and probably one of the more important ones, is capital gains tax. Now, for a lot of clients out there who invest into a voluntary portfolio, when shares are bought or sold, capital gains tax would be triggered. This could be seen as either a positive or negative, depending on that individual's specific position. Making use of one's annual allowances in terms of capital gains tax could be seen as a positive. However, for certain clients, they might want to delay the capital gains tax until they actually share the underlying unit trust. Another important element is capital gains tax. Would be very much dependent on a specific client and their specific tax position. We're looking at a share portfolio. When an individual buys or sells any stocks within the portfolio, capital gains tax would be triggered, compared to a unit trust environment, where if the underlying shares within the unit trust are bought and sold, it would not trigger any tax unless the investor sells the actual units in the unit trust. The fourth element is investment entry levels. Now, for personalized share portfolios, generally, the entry levels are significantly more than a unit trust environment, as the individual owns all the different stocks within their own portfolio. At Warwick, we've got a minimum of R1 million to invest in a personalized share portfolio, compared to unit trust, which, depending on the platform, the minimum investment value is generally 50,000 to get the portfolio started. The fifth element of choosing the right portfolio for you is diversification. Now, there's the old saying of the only free lunch in investing is diversification. Within a unit trust environment, generally portfolios are a lot more diversified compared to a personal share portfolio. Depending on the relevant asset manager as well as stockbroker, generally share portfolios would hold anything from 10 to 30 different underlying stocks, compared to unit trusts, which could hold up to 80 or more different stocks in the underlying portfolio. Ultimately, it would depend on each investor's specific goals, tax position. Needs, and tax position. We would recommend speaking to a qualified financial advisor or Warwick Wealth specialist to look at your own position and goals and needs for the future before making any decisions. Have a great day, and thank you for listening.